So, welcome everyone. Good morning. Welcome to the show.
Hello, hello. Henry, how are you, my friend?
All good. Steve, welcome. Good start into the week. Everyone, YouTube, chat, welcome. I hope everyone had a wonderful long weekend. Let's start. Okay, Steve, so where are we? Guys, first of all, as always, you already saw it. Risk disclosure, no financial advice, pure educational content. Please do your own thinking. Never take everything we are saying for granted and do your own analysis and your own strategies. So, okay, let's go. Steve, tell us, where do we stand?
So it's a bit of a off week, I would say, because we're coming off last week's holiday week, slower market movement towards end of the week. Futures were still open, but as we know, stocks were closed. So we had some news yesterday, but leading in today, let's just take a look at Forex Factory quickly, Henry, because I don't see much today. The main, I would say, economic print and driver was trade balance. This happened about half an hour ago, you guys. We didn't see much movement, but let's just quickly get into it and just see what actually happened. And I have a bigger story that happened prior, but yeah, since trade balance, I guess you would say it's more of a yellow to red calendar news. What did it actually mean, and what had happened? And is it affecting Nasdaq at all, bullish or bearish? So let's just quickly look into the print, what the actual came out, and yeah. So it seems like May came in worse than expected. The deficit has it just keeps ballooning up, 77 billion, up from previous 54 billion. Wow. So I would definitely say that's a balloon, Henry. 77 billion up from April's 54 billion. So this is, of course, just reading the print. This is bearish. What's happening with price action? We're down for the day, but we've been selling off ever since Asian Open. And I will also bring up the headline, what happened pre-market, which is causing a bit of a sell-off on Nasdaq. And then once the print came out half an hour ago, we didn't see much movement, but it's not so much about the reaction right on the print. What matters more is what's happening after the print, and we're continuing to sell off on Nasdaq. But interesting story where Nasdaq and ES selling off, but we're actually seeing a different picture in other indices. But I will get into the rotation play a little later on. But
Let's also take a look on Forex Factory on Friday. NFP came out, and that's also
but a bit of a divergence happening on indices on the rotation, which I'll speak about later.
Yeah, let's wait for the open, right?
But back on Forex Factory, this is what we're getting. Big deficit going on the trade balance. And let's just go previous. What happened? Yeah, especially a lot of news came out. We had ISM PMI that came out yesterday. Saw a bullish reaction right on New York Open. Sold off a few hours later in the day. Came in about pretty close to even from previous. So which is why we didn't see much movement right on that print. And then let's just look at Friday. Yeah, because Friday we didn't have much because it was a holiday. And then Thursday we had the great NFP.
Sorry, it was Thursday, not Friday. Friday was holiday.
Yeah.
Thursday.
Friday was holiday, so yeah, we had NFP. So what did you see on NFP on your end, Henry?
Yeah, I mean, an unexpected slowdown, right? I mean, they have been thinking it's gonna be average, but sitting at 50-ish thousand, it's super weak.
Yeah.
So therefore now you can argue you have two scenarios. Which one do you want to choose? Do you want to choose number one, that economy is weak and therefore everything is now needs to go down because economy is going to be affected, and we're going to see a whatever big thing happen? Or do you take scenario 2, that basically big economy means no more rate hikes, but the opposite, right? So a dovish outlook, so to say. And yeah, let's see. I mean, currently the market is, I mean, yeah, and NQ being down 1%, it means nothing. But as always, if it happens a couple of times within a couple of days, then people always assume that's the beginning of a big correction, beginning of a big slowdown or whatsoever. But I'm not so sure about that, to be honest.
And that's a pretty big gap from the actual to the previous, less than half on the jobs.
Yeah.
So is this, so what's going on underneath that? Or do you think AI is taking an effect, taking away a lot of those jobs, or what's really going on here?
I mean, it's tricky. To be honest, unlike already 2 years ago, 3 years ago, right, under the Biden administration, we have seen super strong number, and then they have been all corrected down, and then they're also like, hey, it's fraud. The whole mechanics, the whole mechanic of how those numbers are getting acquired,
and all the government jobs, because a lot of those jobs were government jobs, and of course, once Elon came in and Trump came in with the new administration, they filtered out a lot of those jobs. I don't know what the number is, but it was a big percentage of people that were taking up those jobs for the U.S. government. So which I believe that's actually the real story taking effect of these numbers, not so much AI.
Yeah,
but
I think it's going to be a mixed bag, right? By the end of the day, we will probably never know what's really going on underneath. So therefore, I don't want to speculate, because it can be AI, it can be governmental jobs, it can be even maybe ICE, right? Even maybe ICE, all the re-immigration thing that's going on, because people are getting out, maybe they cannot find back into the jobs, because under Biden, they counted basically everyone who had if you work 2 hours per week, they counted you. They counted you as a job. So now it's the question. All right, it would be nice to. It would be actually nice to understand and to get informed about how they actually calculate those numbers. Like, what's the actual transparency-based calculation behind? And no, I think for me personally, I don't care that much about the number itself. So I'm not an economist. It's not like I'm not doing analysis going like Goldman Sachs. You can see JP Morgan, that's going to be affecting our portfolio strategy over the next months, right? It's we're traders, we're intraday traders. So the only thing that matters for me is basically the impulse and the movement behind the volatility. And so if I see, okay, last Thursday we got a weak number, and then Friday day off, long weekend. Usually the week after the long weekend used to be a strong one, because people were relaxed, they were in a good mood. So I assume for the time being, if we don't see a reversal, we will talk about the charts later, but I would just follow the trend, right? If market goes down, I would just not I would not do any kind of interpretation and try to be smarter than the market, because by the end of the day, I don't know, right? It might be true.
Never.
Yeah. So and I don't care, to be honest. I don't care. In the beginning, when I started trading, I tried to understand and to predict, all right, this must have these implications and whatsoever. But you never know, because next month or 2 months later, they're gonna revise this whole thing up to 200-ish thousand, and then it doesn't bring you anything, right? It doesn't help you. It doesn't help you with the trading. It's you might feel better about yourself on the surface, I'm smart, but in terms of trading, it doesn't help you with anything. And so,
but that's the key phrase. That's the key phrase you said, is never try and outsmart the market.
Yeah.
Because back-tested results doesn't guarantee future profits, you'd say. Because the momentum could shift. So sure, maybe the back-tested results could work for another month or two.
Yeah.
But other times, maybe only works for a couple of weeks. Like the momentum, everything is continuously changing, you guys. So don't be always fixed on one idea, or even just fixed on one asset. This is why we showcase all indices. Henry looks at gold, looks at silver, looks at oil. There's so many different factors you need to look at. and also compared to why there's so many successful stock traders as well, because they have a screener and they screen through hundreds of stocks, and they're never closed in on just one. So for those Nasdaq traders, I'm sorry, you guys, but you just have to accept the fact that we're not always going to be trending, and your setups will not always be working the same because the market's always shifting. And stop trying to beat the market, but more so just follow that rocket ship that Henry has.
Just
there.
trust in Elon is all you need.
Trust in Elon. But look how we came back to fair value, held as support on the opening.
We have been talking about, right? We have been talking about it, the whole thing, like since the IPO. We've been talking about, hey, watch the 100, like the initial IPO price, and then underneath the 100, the pre-IPO price it's supposed to be, and it held, right? So then you know what's the mechanic behind this. And yeah, I think so. Like, let's shift gears. NFP, basically, it's guys, for the time being, there are two possible scenarios, and I think those will you will hear about them more and more in the next couple of weeks, and one side will win. It's more common than not that the Wall Street chooses one side, one narrative that fits their positioning, and then they will talk about this narrative that fits them. So it's going to be either it's a dovish outlook, and we might see some rate cuts, or a slowdown in AI, capex spending on data centers, whatever, not work, whatever. I mean, they will find a way, right? And
don't bring up the data centers, Henry. Oh no, they're investing so much money.
Yeah, it's crazy. And I mean, we can talk about it at a later time. The data center, in my opinion, it's a horrible investment because given the short life cycle of the GPUs and given their prices, it's like I would not invest money in it. Not my financial advice, but. And given that, let's get to our big friend first, our Korea Composite Stock Price Index, KOSPI, right? So we saw it railing. Actually, and you see, we didn't talk about it for over a week, and our resistance level actually held. You see, we closed the gap. We had our level here, went all the way up, closed the gap, could not break above. And we said if it doesn't break above, then it's probably going to bounce and bounce back all to this higher low area here. And so now we're sitting right in the range.
Looks
and
like
I think,
a scary pattern. Does that look like a head and shoulder?
Yeah, probably, yeah. Let's zoom out weekly. Yeah, I mean, it's, I don't know, like it's a top. Looks toppish, but by the end of the day, if they decide, oh no, all good, might go another 30%, 50%, right? So
it will go the measured move.
Yeah, kind of. So basically, and I think that was a driver, right? So there were, so we had weak NFPs, we had the long weekend, we had now like this correction and Korea Composite Index. And I have to say, over the last couple of weeks, we have more and more news that are questioning the whole narrative about the overall profitability of AI, right? So more and more, at least it's from like what I hear, what I see, that some sources, like I'm not talking about mainstream, but like here and there sources from Goldman or from GPay, that they are starting to questioning, like, hey, all right, how do they plan to refinance the whole investments? Because it's one thing, like, all right, let's build up infrastructure and being the leader. But the second thing is, all right, if you made an investment of 300 billion, you also need to find a way profit from it. And in my personal opinion, I think the local AI LLM systems, they have gotten so strong. So I think we will like the open source systems, and I think we will see a major shift in these regards, that more and more people will start also looking and like basically building their own LLMs and their own servers or machines or local machines, whatsoever. And
that's the real opportunity.
And that's the real opportunity. I think, in my opinion, I think this is like where the real opportunity sits. Basically, in terms of not only selling the shells, but also creating a product that is profitable overall in the first like. And yeah, let's see what's going on. So Nvidia currently sitting at minus 0.5. Semiconductors, supermicrocomputer, -2. Broadcom, -2.7. So yeah, you see it's overall weakness. And if you consider how far we came down here from the high, that might actually also be a sign of overall weakness, right? I mean, Nasdaq is Nasdaq is still holding its value, but just one thing to add: there's a formation it's called diamond formation. Maybe some of our listeners, some of our viewers are familiar with that. And what it basically does is, if you're on downtrend and you have a diamond formation, let me draw this. And you have a diamond formation. This is basically a major reversal pattern. So in a downtrend, it looks like this, and in a come on, sorry guys, TradingView is really not the best platform for drawing. And in an upward, you basically have, it looks like this. So, and this is, I think, something that people need to be aware of, that you have those kind of topping or bottom formations. It's a reversal pattern on tops. And currently, if you look at this, it looks to me, if I delete this here, then it looks like a bullish flag, right? Bullish triangle, like continuation pattern to the upside. If we break below, but if we break above, but if we break below, and we break it like, let's say, in this way, and then a retest, and then we go down, then that for me, for a time being, maybe for the next couple of months, gonna be basically a toppish reversal pattern. And I mean, it has like all those fancy names from the 90s and the thousands, like from Forex and candlestick analysis. But I think sometimes it's just be aware of it, right? And I don't know what will happen, but as Steve mentioned, I'm always watching other markets, and up to this date, basically AI or like Mac 8 made the Mac 7 have been like the runner-ups, right? Apple still looks strong, but the other ones, Microsoft, weak.
So is today the day? I think I saw that SpaceX officially is on Nasdaq right now. Officially.
Yeah, it's apparently it's today that it's happened. And JP Morgan, I think it was, assumes that 4.x billion of passive inflows are basically coming automatically, like from all the ETFs and things, right?
Yeah.
And then Nasdaq needs also to do a kind of some rebalancing. And so yeah, I'm curious. I'm curious if smart money gonna dump shares into the weekends, right, and sell off, take it as like a liquidation event, or if it actually will lead to another run up. But as so often at Wall Street, you don't like buy the rumor, sell the fact, right? So the question is now, is this event basically just an opportunity to get rid out of your position, from a position? And so
we'll wait and see, because this is also summer months as well. Volume's a little slower, but a lot of these big guys, they're not putting they're not rebalancing their hands in the actual stock market. They're using other brokers, futures market, dark pool brokers. These guys, especially the big players, the JP Morgans, the Goldman Sachs, where a lot of the money is sitting. So they are secretly moving their hands, and we probably will not see the real reaction until later on. So, but yeah, all we can do is wait and see, and just focus on intraday, as always, with Purdia.
And I mean, that's the thing. I'm not sure if people have seen Samsung. Let me find it. Is it Samsung? Yeah. So basically, Samsung made a super huge, like record-breaking announcement of profits, and during its earnings call, the stock still sold off because the expectations were so high, right? And people have been telling about, like speaking about it for the last couple of months, maybe the last year or something, that the evaluation got so high, so it's basically impossible to jump over your own expectations, right? And I think that also might be something that we will start to see more and more in terms of what will happen. But Steve, one thing with Samsung.
Oh yeah. I love the gaps. I love it.
I know you love the gaps. No, but jokes aside, I think like this is the area we need to watch out, right? So because that was the previous all-time high. So we have huge support, gap close, support, and we have here 1, 2, 3. Basically, it's also support. Maybe not as big as the gap one, but at least so we have support area 1, 2, 3. And I think this is what we need to watch out for going forward, Samsung and Samsung. And it's not about like many people asking me like, Henry, why as a intraday futures trader of NQ, why do I need to watch out for Samsung or Cosby or like Apple, Google, whatever? Like, yeah, you don't need to, but it gives you, it provides you an additional edge, right? If you know that Apple owns a huge chunk of basically, or like Apple is making up a huge chunk of Nasdaq, and Apple moves dramatically, either upwards or downwards, you can use it as an additional edge for your own trading to understand, okay, is the market maybe in a strong or a weak position, right? And this is how you can also decide how far, what kind of risk you want to take, maybe position sizing, or you can also decide what kind of take profit you want to make, because if you know, all right, NQ didn't move at all, but let's say Apple and Google sold off dramatically and like -3, -4%, then you might want to go instead of a 50-point target for a 100-point target. Just like to give you an idea to play around, to backtest for yourself, because if you see that 2 or 3 of the major players are already running away from the index and the index is still lagging behind, that might give you an edge, because at one point the gap between of the spread will close, right? And this is why what Steve and I are trying to show here with Steve's correlation matrix that we're going to talk about in 7 minutes once the market opens, and also why I'm showing over and over again all kind of SpaceX and Apple and Microsoft and Google, like all those big, huge stocks that basically move the markets, right?
Yeah.
That's the whole idea behind.
Yeah, and that's what we always try and look at. We always find clues in the market, something that has that imbalance where the market needs to catch up to. Because if everything is in line, then we have no edge, Henry. Because it's very unpredictable what's going to happen in the future. But once a few big assets are trailing away, or other indices are trailing away, and Nasdaq or let's say S&P are just stuck in the mud, then that could paint a little picture what could possibly happen. Not a guarantee, but an idea for the future.
Yeah. And I'm actually super curious. CME has been talking about that they will launch like the F futures on the biggest 20-30 stocks, right? And I think that's gonna be so much fun for us, especially for the whole prop trading space, because this will open up so many possibilities, right? Like you can trade IPOs, and it will also be much more fun for us to talk about. Yeah. Because sometimes if you see like the index is basically doing nothing, but you have some amazing stocks opportunities, and especially with futures, huge leverage, high, usually on the big one, on the main one, you have also proper liquidity. I'm really curious about this.
Yeah, it's going to be, that's the thing about markets, my friends. It doesn't matter what time of year.
It's never boring. All right, guys, if you have any question, drop a comment down below and we can answer them if you like. Yeah, so let's see the big picture on NQ. So NQ, again, in my opinion, two possible scenarios. For the upside, we have the bullish flag. For the downside, we have the reversal diamond formation. And this is actually what I think how it might play out. So we have the second tier support area here. I call it S2 for second tier. And we have the first tier support area here. So like those levels I am watching out in the big picture, right? So I want to see will the move be able to break through either on the downside or on the upside, like similarity, right? And then the big all-time high. So that's basically the levels I'm watching for. So if we're going for an all-time high, then I want to break it, that it breaks above and then goes up. And now, Steve, you have your gaps. I have my measured move.
There it is. That's a big one.
That's a big one.
How many points
like,
is that exactly?
It's a lot. It's 28, 7,000 points.
7,000.
Yeah, no. So like, yeah, it's basically going towards 40,000. And again, right? I don't know. Nobody knows. Okay, maybe Trump knows, but apart of that, nobody knows what will happen. But I know one thing for sure, that Trump is all in on markets, right? And he is not tired to sell
And the World Cup.
and the World Cup, obviously. Yeah, I think it's a topic for another time, right? Okay, yeah, and basically, and now the question is, if we go down, what's the goal there? If we go down, the goal is actually this low here. This is actually on a big scale, the big move. So it's also 29,023. So it's also, we're looking at almost 6,000 points. So almost 8,000 on the upside and 6,000, 6,500 to the downside. But again, we're intraday traders, so this is something for you to have in mind. And why is it important? Well, if you understand how the market moves and you see the market breaking out, and you can be really, really sure that on both sides are many, many stop losses, and also options, right? Option plays, gamma, like CTAs need to cover, need to reposition, need to go out, need to rebalance, all kind of things. So it's like it's market dynamic, and this is why we're talking about this. We don't talk about it because it's like we have some analysts and we're just like, oh yeah, I'm a chart analyst. It's not the topic here. The topic here is really for you to make you understand that at these things, the big money is watching it on the big scale. Also, they not only watch fundamentals and flows and dynamics, they watch everything, right? They watch everything that gives them any kind of advantage. And that's the thing. So it's not enough just to trade ICT or just whatever. I mean, if you just scalp around for 8 ticks, 10 ticks here, then you can do whatever you want, right? You can basically just throw a coin. No financial advice, but you can basically do what you want. But if you want really to make, I don't know, more than 50 points per day, then you should understand the dynamic of the market, because this will also help you get better with your position sizing, realizing where the opportunities lie and how far the take profit, like how much of a profit you can take, right? And yeah, so that's basically the goal. What else do we have? ES actually looks more, I would say, more bullish.
Say that's still diamond formation or broke out of its diamond?
Like,
it's a little tricky.
That's the thing. That's the thing with diamond, right? I personally never liked diamond formation because it's just a really hard to predict in real time. So I would say NQ looks more like one, but at the same time, I'm 50-50 on it. So I also see a bullish triangle, bullish flag. ES. Yeah.
That's a tough one.
That's a tough one.
Yeah. It seems like it already flew past its 50%, because that 50% area looks very important on the diamond.
Yeah. And that's the thing. So, yeah. But I know one thing. If ES starts to go up, then NQ will do the same, right?
Yeah.
Just a matter of time. Maybe not immediately, maybe not instantly, but all right, we have the open.
Yeah, we have the open right now. Let's
say triple Qs. And I mean, actually, triple Qs is also always nice for patterns, because you have less noise. Like you don't have the overnight session, especially with Asia, with thin liquidity, right? So it gives you a much better sign in terms of. And here we have our like still bullish range, so to say. Let's open it up. So first target is basically gap close.
Yeah, to the upside, yeah.
It's basically gap close. 15, yeah, $7. That's basically the first target. And that's so crazy, right, Dow? It's just does his thing, just does his like slowly grinding up. And the measured move is still intact.
Still intact, yeah. We're about more than
555.
50% there, so that's what's going for. Originally Nasdaq had its first measured move, now it's consolidating, and now Dow Jones has its measured move it wants to take. So it's very interesting. Yeah, while gold and silver are just bottom side of the range.
Yeah, but I mean, it's actually interesting, right? So we had this area here. We took it out, established below, and then we just gapped right above the resistance, right? Same for silver. It's not pretty. It's really not pretty. It's hard. Like to be honest, it's hard to trade because you really don't know what to do with your stop. Like you're long here, getting stopped out. You're long there, it might extend as well. So what do you do on the long side? On the short side, same thing. So let's see. Oh, you see our big level, 67.00. How far did we come down?
Yeah, we're holding for now.
Yeah, but look, we came basically. What's the low? 6704, almost to the tick. Not so. Yeah, it doesn't matter. I don't know which level work. I think it's just important that you get an understanding for your style and you back test. It doesn't matter if it's like a trend line, if it's a moving average, 50, 100, 20. Just back test it, just see how the price over and over again reacts to these zones, right? It's really getting your eye accustomed to the same pattern over and over again. It's basically pattern recognition. It's training, doing the same thing over and over again. So yeah, but 67.00, at least for time being, held. And I want to, like, when we have been talking about the news, I also want to say something with the suite of Moose. And we talked about it 2 weeks ago, right? Once it came up that they will start negotiations. We talked about it and said, like, hey, it will not be an easy ride. And we have seen it over the last couple of days, over the last couple of weeks, right? It's not an easy ride. And I'm really curious to see if they were able to find a proper solution to this. VIX also, why is VIX important? Well, it's the big money. The big money sits also in VIX. The big players, especially like all the options play, right? So once we.
So how would you rank it, Henry, as like a volume weighted or traded asset compared to other assets? Would you say a lot of money goes into the VIX comparatively to? I wouldn't compare it to, let's say, like indices or stocks, but overall, let's say compare it to bonds. Like, would you say it's even worth looking at volume in the VIX at all? If you're able to gather the information, like how much volume is actually traded to the VIX, is it even worth it?
I mean, I saw people trading corn and making money. So it doesn't matter. It doesn't matter which asset you go for. It's all about understanding all the ins and outs of the asset and understand who owns it. Like, and how is it being traded, right? Is it outright? Do the people who were like actually traded directional with on the future contracts, or is it just basically an image of options that are like the market makers are doing? So, but no, like bonds, in terms of volume, bonds are definitely number one, right?
Number one,
because that's then stocks. Then I'm not sure actually about, is it then futures or options, because options been like grew so much
last few years,
in the last couple of years. So I would not bet my money on futures. Before it was definitely futures and then options, but now it might be depending on the asset. It might be even 50-50. I'm not sure about that, because option plays become so big. And especially, I think nobody thought that retail would actually become such a major force in the options, especially the short The short ones like 0 DTEs or weeklies.
No, they said like the retail volume has grown substantially. Like it's close to like 20% of overall volume now, just in the options market. Of course, not the futures market or stock market, but the options market. It's very interesting how retail can be a big driver of these liquidity events too. But when we talk about liquidity events, there's usually only one winner, and that's the market makers.
That's the market makers, yeah, definitely. All right, let's see. So
we're getting a bit of a sell-off right now.
Triple Qs.
Q.
Yeah, I mean, let's quickly take a look at SpaceX. So basically, we're opening and selling off right away. So yeah, it's like SpaceX is really a tricky one for me. I don't want to make any recommendations because I have a specific opinion, but like we're not here to trade opinions. So just be aware, but follow it, see how it trades. I think at one point sooner than later we will be able to trade it with futures. Apple. I mean, yeah, we didn't talk last week about Apple hiking prices, but sometimes up to 20-30%, right? So initial,
like on the actual product in the phones.
Yeah, on the MacBooks and iPads and stuff like that. So it's basically up to, I think, up to 30%.
Oh wow.
Some like 20-30, and that was actually it was here announced last I think from Wednesday to Thursday. It was the announcement, sold off, and then Wall Street probably thinking like, oh wait, people will buy it either way, so more profit for Apple. That's actually a good thing. And okay, nothing here. Okay, let's shift gears, guys. If you have any questions, feel free to ask them in the comments down below. Otherwise, also be aware, risk disclosure, no financial advice, educational and entertainment content only. Follow Purdia, Steve, and if you want, even myself on socials. Links down below in the description. Steve also has a free newsletter where he talks about all kinds of market-related things. It's super interesting, so you can also find the link down below.
Yeah.
And yeah, let's shift gears. Steve, let's talk about your correlation plays.
Yeah, let's look into it. So, so we have New York Open selling off. Just quickly see. Yeah, we're getting a sell-off, I believe, in all 4 indices right now. No surprise, but then again, it's New York Open, you guys. Let the range play out. A lot of times, this is the range what I use for my intraday. So however many points is given on the first 15 minutes. So let's say, for example, right now we're getting about 183 points. And if my bias continues to the downside, I do all my analysis. I'm like, you know what? I like this 182 point play as an idea. This is what I'm going to use for the downside, or sorry, for my stop range. So it's not so much stop level, my stop range. So wherever I get into the trade in the future, no financial advice, but let's say my bias stays on the weak side, then this is the range I'm using and where my stop loss entry would be based on the measured move. So this is why Henry brings up, the macro and the long form analysis, because that long form analysis can be played into the short term intraday analysis, which is what I'm doing right now, which is what help you guys with your prop game, with your prop strategy when measuring risk. We're not here to tell you the type of setup, because there's a million different ways to place the setup, but there's only a few ways that it should be properly assessed. And sorry, not a few ways, but a few important ways we can talk about: how to protect your account, never move your stop loss, and how to use that measured move that can be on the long end as well as the short end. So what are we seeing today? I have my ranking YM as the strongest, as you can see, the percentage side, and NQ as the weakest. So overall, Nasdaq is down about 1.3%. So what I like to do is I look at the ratios just quickly and see, because Nasdaq is forward looking, it's a growth index. Usually if Nasdaq is down, it should be down the strongest to the downside. So what I do is I look at the ratios, you guys, NQ over ES, YM, and RTY. And this is showing me, okay, for me, this is a balance in a way. if Nasdaq is showing a major red over 1% today, I automatically assume, I don't like the word assume, but let's just, for context, assume that if Nasdaq is down, it should be down the most for the day. But it's not always like this. But because it is, it's clearly giving me lower lows, and lower lows, also on Russell 2000. So it's quite simple. And I put it last on the list. This is why I look at the ratios. It's not always like this, where I've seen many times before. If Nasdaq is down 1%, possibly Dow Jones could be down much greater based on the ratios and the percentages. So I'm not looking at Nasdaq for the weak side. For any short ideas, I'll be looking at Dow Jones because I look at the weakest or the strongest asset. So for today, it's pretty balanced. Comparatively on the ratios on the daily open, Nasdaq is down the most. So let's go back on and also paint the picture. And on the pivots, I always look at narratives. I always look at headlines. We saw earlier we had the US trade balance, not much reaction from the actual print, but we continue to sell off right into New York Open. That came around 29,680 area. Now we're continuing. You could say, we took out the lows, but I'm not interested in these lows, you guys. This is the London lows. There's no volume. So sure, you could say this is a bit of a swipe, could go back up, but because there's not much volume traded during the pre-market session, it doesn't matter to me. So what I like to do is line up my pivots and see what makes a little more sense. So what is the bigger story today? I labeled out, okay, don't be scared. I put missiles because I was like, you know what? I could put Iranian news. I could put the moves. But you know what? I think the main headline came out pre-market was, there were some missiles that were fired off. And this is what created a little impulse that not only created a little shift in the market because, we saw some bullish upside on yesterday's price action. It kept, you could say higher lows, also lower highs, but creating, in a sense, a bull flag, diamond formation, whatever you call it. And right when this headline came out, pre-market, that's when we got an impulse that not only saw bearish price action, but also never got retested. And this is very interesting to me because it's pre-market and not even a pre-market got retested. So just slowly trickle down. So let's see if this trend continues to the downside, or will we see a bit of a bounce on NQ and retest this level of 29,950, a nice round number. Let's just mark this out, this headline, and also get into the meaning of this headline and why I put it on my chart. So what was the news? It was some Iranian Revolutionary Guards fired at least 2 missiles at commercial vessels. We don't know what kind of vessels, whether they were European, whether they were, from Saudi Arabia, from the US. We don't know exactly what happened. And then again, who knows what the truth is? All we care about is what the reaction was. And we got a strong reaction that never got retested. So clearly there's strong momentum, bearish sell side. Okay, so that's what matters in markets. And why does it matter? So again, just quick stat for you guys. Strait of Hormuz is about 20% of the world's oil supply. So any attack here going forward, and as you saw in the past, will create disruption as well as a bit of disruption in the markets. So it means higher oil prices. Oil is up about 1.8%, breaking highs currently right now. So still strong momentum on oil. Broke the highs from pre-market and continuing upwards. I'm not saying it's going to continue this measured move right around, let's see, just for quick context, measured move currently right now is about 90 points on oil, which you can obviously trade. And there's a lot of oil traders in the prop game as well. So just keep that in mind, you guys, where the headline is on your side if you're looking for bullish momentum. But so far the headlines are lining up, affecting it bearishly. And as you know, on the growth side, on the tech side, it's heavy in future applications. It's heavy whenever oil spikes. So this is why Nasdaq is getting affected the most. And let's look at ES. ES is about break even, but yeah, still getting affected. Not much movement in the ES. I don't trade ES too often, you guys, but whenever I see strong momentum on the ES, I will make the play. And then looking at Dow Jones, Dow Jones seeing the sell-off pre-market. Right on New York Open, coming back to balance. Russell 2000 was a little stronger, but getting the sell-off as well, coming back into balance. So let's look at this quickly right now and measure out the pivots. Now that we have the headline pivot right around 29,950, now let's measure out the risk to the downside and see what would make sense. So then again, a lot of people are a little too zoomed in, Henry, and looking at this London low, which is, to me, it's a distraction. If I was able to cut out the entire pre-market, I would. But because these important headlines come up pre-market, which we got right around 1900 hours, then I have to put on pre-market charts because this is an important headline and created a splash into the market. So let's zoom out and see the risk to the downside. What would make sense if we would continue the move down? And that's right around Friday's New York Open. Always looking for heavy areas of volume. That's always a guarantee. That's the beauty about markets, how the timing and the place, you will always get that guarantee. So it's right around 29,360. Let's just mark that out. This is my risk to the downside. Just mark this
And
out.
maybe just one thing to add. It always comes together, like everything always comes together. So the missiles are in, AI is weak, NFP is weak, and this is what you want to see. So if you really want only to trade the AAA setups, you basically wait for everything to line up. So you want to see weak stocks. You want to see basically weakness on the momentum side of the AI play, maybe even turn into the whole AI narrative. You want to see some missiles if you're on the bearish side, right? And then the opposite for the bullish side. So you want to see peace negotiations going forward. You want to see AI being super productive and changing the life and the world and whatever. So that's basically what you want to see. And if it all lines up, then you combine it with Steve's correlation metrics. I used to trade in a similar style. So I also used to trade correlation of markets. And so this is how I, for example, developed those also things with the stocks, right? That I'm watching the stocks in addition. But you don't need to. You can also keep it simple. You can also keep it super simple. Everything works. Again, we are not tired to repeat ourselves. You can choose whatever you want. You can be super successful with ICT. You can be super successful with price action, news trading, openings, closing, whatever. There's no right or wrong. It just needs to fit you, and you need to stick with one strategy. It's trading is like every other profession. You need proper apprenticeship time. You need to get in your work, your preps, right? Your hours, working hours. And by working hours, I'm not all screen hours. I'm not talking about just basically watching the ticks going up and down. It's basically back testing, all kind of walk forward optimization, different strategies, different time frames, comparing them with each other. And that's the only way how you can get better, not only sitting in front of the charts and watching them going up and down.
Yeah, exactly. And the key word is it has to make sense. And I love that phrase where if you cannot explain your strategy, at least within 30 seconds, you need to try and reevaluate how your strategy is. Don't make it overcomplicated, but also don't make it too simple. But all you need is 30 seconds. If you can explain in 30 seconds, and it would always make sense intraday. Also, while you live journal, we talked about this before. Always live journal, you guys. Either your thoughts, your strategy, put a timestamp, be like, okay, Nasdaq, yes, moved in this direction. This looks interesting. If it maybe comes back and retest it, I could look for a possible idea. So this is why I put on the pivots, because it has to make sense for me. Largest volume push into the market, and look how we reacted as the days went by. It just kept bouncing. So for me, this indicates this is a strong pivot. 29,360. It's been bouncing since the week, and look, we came down, we tested again. You can't make this up. And then what time did we retest this, Henry? Towards the close of the day, which is also a large area where Goldman Sachs, JP Morgan, Citibank, all these guys are unloading their shares, creating liquidity in the market. So not only on the start of the day in New York Open, but also the close. And look how this is lining up this pivot. I don't draw these out, before our stream, you guys. I'm doing this all live. It doesn't take me long, but I always make sure that I'm doing this live. Nothing scripted. Everything's done in front of you guys. And look how, naturally these levels play out. So if the bearish price action continues, this is the area I'm looking to the downside. And we are closing in right around about 150 points away from that pivot. So for me, I'm not jumping into any entries. Sure, it looks nice to the downside, but this is why I look at other indices, you guys. And the live ranking is lining up with NQ as the weakest, showing clear direction, and our RTY and YM as the leaders if I'm looking for any bullish scenario. So let's just quickly line up the measured move from pivot to pivot and see if price, if we get some crazy headline. Probability for us to retake this level for the next 30 to 60 minutes is obviously quite low, but then again, you never know markets. We get some crazy Trump headline. Everything is fine with the ceasefire and fake news, and then we can see a rocket ship to the upside. So always measure the downside and the upside. Never get stuck to one bias. And where is the measured move to the upside? It's right around 30,550. So let's measure this out. 30,545 to the upside, and this is right around the high of Tuesday. High of Tuesday, and let's zoom out just a little more just to get context. High of Tuesday, which is acting as support right around Monday on the 22nd, acting as support. We got the flush down, got the retest, and now so that pivot makes sense. So this is what I like to do. I just like to double check if that pivot makes sense. If we saw some good touches, clear support, not rejection, acting as resistance. So I have this on my chart. The same thing can be done with other indices, and that's what I'm going to do right now. So what am I going to do? I'm going to line up these pivots on Dow Jones and see what makes sense there. So Nasdaq is done. Pivot to pivot. This is right around, how many points is this? Let me just look at this. Yeah, right around 570, of course. Yeah, this is not the range I'm using for my stop loss, but still good to know. This is my stop.
Okay, I can trade nothing.
Right around close to 600 points from pivot to pivot. But if I'm looking at my intraday measured move, let's just say the opening range of the first 15 minutes is around 180 points. It's still a wide range, but I would say this is a safe bet to use for your measured risk. And then now, and since YM is the strongest, let's look at YM right now. So YM clearly had strong momentum. Where was the missile news? This was right around 18. Yeah, right around here. So,
but I actually want to say 600 points would work out on a huge account if you trade micro YM. I always forget about micro IM, like 50 cents per point, right?
Yeah.
I always forget about, but it actually could work. I mean, risking 300 is insane, but
yeah. And then I'm always trading micros, you guys. I'm never trading the minis. We're not dealing with Henry's not giving me a $5 million Purdia account to trade with. If that's a different story. If I had a few $1 million, then I could probably measure my risk. For sure, I'll be adding the minis.
Trade with one lot.
One lot.
5 million, one lot.
One lot. That's all you need. But no, you guys, we're end of the day. Yes, you start on the sim funded, then you pass either the challenge or the instant. You get onto a live account with Purdia, trading with real capital, then real order flow, and then again, you're still going to get people risking that entire mini, but as Henry probably sees, using the micro lots, being more accurate, setting your risk in dollar form, having a risk calculator. I can always get into this later. This is the only indicator I have on my chart, Henry, and that's my risk indicator, but we can always get into that later. You can look at these. I've created this little script, but yeah, like any risk indicator you'll see online is always free. It's always available. So that's just the one indicator I use. That's all it is. Sometimes I put on the VWAP to see the fair value price. I don't necessarily use VWAP for a bias or a setup, but a lot of times when we get that retest on VWAP, it's we could see we could see a little shift, either a shift or some vibration consolidation, because that's technically the fair value of the price leading into New York. So like Henry, I don't know if you've ever used the VWAP or look at it.
I just want to add that it doesn't matter if you use VWAP or moving average or Keltner channel, Bollinger Bands, whatever. It doesn't matter. Some people are trying to tell you like, yeah, volume profile is the new hot thing, or volume trading or whatever. Like, really, it doesn't matter. It's just take one, stick to it. It's boring, right? I have the feeling I repeat myself 10 times per stream, but it's all it is. It just take one style where you feel comfortable. It fits you. It fits your personality. It fits your risk profile. You need to understand. You need to like it, and you need to be able to repeat it over and over again till you die. It's basically the whole idea of trading. It's and also in the same time, I'm sorry, just one last thing. If you see that it stops working and you don't have an edge anymore, then you need also be able to adjust and either to change the strategy or to completely shift to a new strategy, right? This is, I think, also something that many people are struggling with.
Yeah, exactly. Yeah, keep, because it's daily habits, you guys. Like how you go into your personal life goes into your trading. Make little tweaks, but don't make these sudden crazy 360 tweaks every month on your strategy. Keep certain things the same, and maybe more not so much on the setup side, but on the risk side. Because most people are looking at the same trend trading or mean reversion type of setups, but measure out your risk, know how to protect yourself, be happy with not getting all your entries in. If it leaves without you, but at least one or two, let's say, limit orders. If it leaves without you, it leaves without you. A lot of times, if you've watched markets enough, if it leaves without you that quickly, and you didn't enter in all your orders, this is why I spread my orders a little bit. Then the move will be much greater. The trend will be much greater to the downside or the upside. So now we're looking at Dow Jones. It's retesting the level 53,429. I'll just quickly do the pivots and the measured move. I looked at the risk of the downside, New York Open, right around Thursday. You know what? It came up. I would say it's tough. Some would say this is a retest. Some would say it isn't. I would say it's a retest. It was close enough, you guys. You're seeing a bounce. So, that pivot is making sense for me. And that's why I always update my ranking, because Dow Jones was strongest in the beginning. But if the overall market is down, it doesn't mean Dow Jones, it's the strongest asset of the day, it has to continue up. No, just because it's the strongest doesn't mean I'm getting a bullish bias. It just means that if I'm looking for short ideas, I'm not looking at Dow, but just how I'm seeing price action right now. Dow can easily catch up to Nasdaq if it continues, the down move. If Nasdaq wants to consolidate, since the move has already been, entered in pre-market. So this is my move on Dow Jones, 52,950. Nice whole number. This is right around 470 points. 470 points, you guys, that's a big move in Dow Jones. So spread out your risk, use micros. All indices are trading at high amounts of volatility. And this is also a few days after a long weekend. And let's just measure this up. And are we at all-time highs? Yeah, I think we're at all-time highs at Dow Jones. So
we are.
Have any levels still left? Yeah.
No,
we're all-time highs, you guys. So this is why we do the measured move, because whenever we get into the scenario, there's no price action, the high volume nodes to look at. So it's pretty simple.
Yeah, I mean, going forward, we can show the people some gamma levels that are sitting above, right? So that might also be an indication. But to be honest, it's basically more or less the same, because the market maker doing the same thing. They're measuring like not by chart, but by standard deviation, and those things are usually always aligned together. It comes all together. So it's really funny. It's really funny, actually. And yeah, all right, everyone. If you have any comments, then feel free to leave a comment behind. Otherwise, follow Purdia, follow Steve if you want, even follow myself. Links are in the description down below. And if you want to get notified once we go online, then subscribe so you always be up to date. Because and this week we will be going online every day at 9 a.m. So make sure to
Yeah, so
tune
join us, you
in.
guys. Never trade alone. Purdy has a big Discord. Connect with people. I have my newsletter. It's, both groups are completely free. And yeah, we're not saying you have to trade side by side, but at least have a partner, have someone either pre-market or even post-market talk about your trades, speak out loud. And yeah, it's the same goes as any workplace, how you always need team members, people to speak, to bounce ideas from. So I think that's highly important.
Yeah. All right, everyone. Safe trading. Take care. And see you tomorrow, 9 a.m. Eastern. Bye bye.